volatility indicator, momentum indicator, and trend indicator. 3 of them in one indicator. In this video, I want to introduce an amazing indicator on TradingView that is very powerful. Just make sure you watch this video until the end because I'm going to teach you a trading strategy based on this indicator that is very accurate. To add this wonderful indicator to our chart, here we click on indicators and we search ultimate bands, this one, which is written by Big Beluga. Alright, this is the indicator, and as you can see, it has different components. This is a multi-purpose indicator that can help you with volatility, momentum, and trend. As you can see on the chart, we have bands or a channel that is overlaid on the price chart. It is similar to Bollinger Bands or Keltner channels, but it is based on different calculations. The bands are based on super smoother algorithm, which was developed by John Ehlers, and they are calculated using root mean square deviation. The result is having bands that adapt to volatility with lower lag. To optimize the indicator and make it even smoother, we go to the settings of the indicator to adjust the settings. Here for the length we set it at 34, and here for signal line length we set it at 68. The number of standard deviation is set at 1, which means that the upper and lower bands are set 1 standard deviation above and below this middle line. We don't change this because later we're gonna use breakout signals out of the band. Here we turn on show trend breakouts, so they will be shown on the chart. Alright, so here we have volatility bands that can help us with evaluating and measuring volatility. In times that there is lower volatility in the market, the bands are contracted, and in times that we have higher volatility in the market, the bands are expanded. So having narrow bands can show flat market and potential breakout that may happen. If you use also price action analysis in your trading, so you know exactly when the price breaks out of consolidation, but this indicator also gives signals on the breakouts that I will discuss them later after explaining the oscillator part. Please pay attention that the bands can act also like a support or resistance levels. So there are times that when the price reaches to lower band or reaches to the upper band, we have reversal of the price to the middle line. So if you use mean reversion trading strategies, these bands can help you with your trading entries in a similar sense that you use Bollinger Bands or Keltner channels. In this case, it's better to set the standard deviation at 2, so these lines will be set farther away from the middle line, which would be 2 standard deviation from the middle line, so you can only focus on very extreme movement of the price above or below the average. We are using 1 standard deviation above and below the average because we're going to use these breakout signals later. Alright, let's go to the oscillator part, which we have it here below the chart. Here we have the oscillator line, which is derived from the price position relative to the bands. As you can see, it is oscillating above and below the center line, which is set at 0. When it is below the center line, it shows greater downside momentum, and when it is above the center line, it shows greater upside momentum. And here we have this line, which is based on a whole moving average of the oscillator line. This line will help us to identify the overall trend of the market. When this line is below the center line, the market is trending down, and when the line is above the center line, the market is trending up. The center line crossovers can be a good signal on beginning of trends, but please pay attention that you can also encounter false signals, which mostly happen in deeper pullbacks or when the market is in a trading range. So if you want to take a trading decision based on the center line crossovers of this indicator, I mean the center line crossovers of this trend line, you need more confirmation from other indicators or aspects of technical analysis that a reversal is really happening. The best use case of this line is for trend identification. When it is below the center line, the market is trending down and you should look for sell signals in the pullbacks, and when the line goes above the center line, the market is trending up and you should look for buy signals in the pullbacks. Later I will teach you a trend following strategy by the help of this indicator and stochastic oscillator, so make sure you watch this video until the end. Please pay attention that while this trend line is smoother and it will help us with longer term trend of the market, this line, the oscillator line, helps you with shorter term momentum changes that are happening in the market. For example, while the trend line is below the center line or above the center line and showing trends in the pullbacks, the oscillator line goes to center line line or even past the center line, because as I said, the oscillator line shows the shorter term momentum change in the market. So by using two of them together, you can know when a pullback is happening or when a pullback is ending, and use this momentum change within the longer term trend as a signal for entering a trade. And besides this oscillator line can also help you with overbought and oversold conditions. In this indicator, -1 and +1 are marked as oversold and overbought levels. So when the oscillator line reaches to or goes beyond -1 or +1, it shows oversold condition or overbought condition. But as you know, overbought or oversold doesn't necessarily mean reversal. They just tell us that the movement is probably going to weaken, and after that we can just have a pullback. A reversal can also happen after overbought or oversold, but the safest interpretation that you can have with overbought or oversold is that the current movement of the price is weakening. So if you want to take any trading decisions based on overbought or oversold that a reversal is happening in the market, you need more confirmation from other indicators or aspects of technical analysis that a reversal is probably happening in the market. Alright, we have also a heat map visualization here that shows the status of the current trend and its strength and also overbought and oversold condition here on this vertical heat map. These are just taken from the oscillator and they can help you to quickly find out what is happening in the market. Alright, as I said, this indicator also provides breakout signals, which are breakouts beyond the ultimate bands, and they are shown by the help of these signs both on the price chart and also in the oscillator part. As I said earlier, the upper and lower bands of this indicator can also act as support and resistance levels, but in times that the movement of the price is very strong, they don't hold, and we have just movement of the price in that direction. So break out of the bands can also provide a good opportunity to open a trade, but not all of them are worth of trading. By the help of this oscillator, you can take breakout signals that have higher probability. As you know, there are times that when oscillators show oversold or overbought, we have further continuation of the price in that direction, because sometimes they also show strength in the market. So when we have a breakout signal, we check the oscillator for overbought or oversold readings. For example, here you can see that we have a bearish breakout signal and we want oversold reading of this oscillator. You can see that one candle after the signal, the oscillator became oversold. You shouldn't wait more than 2 or 3 candles. If the overbought or oversold didn't happen in 2 or 3 candles after the signal, the breakout signal is rejected. For example, here for this bullish breakout signal that we have here, you can see that we didn't get any overbought reading. So this signal here is rejected. Or for example, for this sell signal that we have here, which is a bearish breakout signal, also no oversold reading. But for this bullish breakout signal that we have here, the oscillator became overbought in the next candle. So in practice, you could enter a long position at this point. To show you more example, here you can see that we have a bearish breakout signal, but not oversold reading in this oscillator. But for this bullish breakout signal that we have here, you can see that we got overbought reading in the next candle. So the signal is confirmed and you could enter a long position at this point, and you can see that this trade was also a profitable trade. Alright, now let me teach you a trend following strategy by the help of this indicator and stochastic oscillator. Here we click on indicators and we search stochastic. We add this one, which is a built-in indicator on TradingView platform. We need to change its settings. So here we go to the settings of the indicator, and here for K% length we set it at 7, and here for K% smoothing we set it at 3. Everything is already set on the chart, and let's see how we trade based on this setup. As I said, the trend line of this oscillator helps us with trend identification. When it is above the center line, the market is trending up, and when it is below the center line, the market is trending down. In times that the trend line is above the center line and showing an uptrend in the market, here in a stochastic oscillator, we wait for the times that K% line reaches to 20 or goes below 20, and then we wait for the crossing of K% line above D% line. When the crossing happens successfully, we enter a long position. So here the signal is confirmed and we could enter a long position at this point when this new candle was opened. The stop loss below the previous swing low and the profit at risk to reward ratio of 2. Again, another opportunity we have here, you can see that while the trend line is above the center line, here the K% line went below 20 and then it crossed above the D% line at this point. So the buy signal is confirmed, and in practice, we could enter a long position at this point when this new candle was opened, and this is also a profitable trade as you can see. And similarly, when the trend line goes below the center line, it shows downtrend and we look for short position opportunities. In this case, we wait for the times that the K% line reaches to or goes above 80 and then it crosses back below the D% line. We didn't have any signal here, but here you can see that the K% line went above 80 while the trend line is below the center line, but when it is crossed below the D% line, the trend line is already above the center line, so the sell signal here is rejected. And from here, because the trend line is above the center line, we focus on long position opportunities like this one and this one. Please pay attention that although this indicator is very powerful and this setup is very accurate for finding trading opportunities, but this doesn't mean that you will not encounter false signals. No, this is not possible in reality. There is no indicator or trading strategy with 100% guaranteed signals. Losing positions are always part of the game and you need to manage your risk properly. There is a risk management strategy that is called 1% rule and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description and I highly recommend you to watch it because without a proper risk management strategy, you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.